focus and talk about the capital goods space. Rohit Natarajan is here to help us understand the dynamics right now. We are repeatedly seeing fund managers coming on the channel and talking about how deep cyclicals like capital goods is an area to look at. The order flows are improving. Commentary from L&T has been extremely strong, not only in the third quarter but ever since. So we have someone who understands that space well. Rohit Natarajan is here from IDBI Capital. Rohit, a lot of people on our channel have started talking incrementally positive about that space, money managers. When you speak to those same people, not in that order, but your clients, the community there, are there inclination to buy those names, and what's the call on capital goods sector now?
So capital goods, as you rightly pointed out, there is some sort of a green shoots that we are seeing. But let's remember one basic thing, that is the capital goods is too broad a term. So the definition ranges from conventional orders of BTG, that is boiler, turbine and generator for your power sector, to transmission sector, to sometimes some may even include the diesel gensets. So it's quite a big universe as such. So we have to choose within the capital goods. There are sectors which are outperforming, and there are laggards within the space. So if I have to tell you the investor interest, that is primarily seen in the transmission space. So the transmission space, and these are the names of KEC and Kalpataru, we have been witnessing very strong order inflows over the last 1 year. In fact, the order backlog itself has swelled more than 30 and in some cases a 50% odd figure. So this is quite an exceptional numbers, and we are seeing a lot of traction, not just from the conventional state electricity board names. There are even railway focus for these companies that is also helping them to garner very strong orders. So that is the area that continues to be an attractive, well positioned for the investors to play around. But if I have to talk about some other sectors, case in point, BHEL's power generation sector, that continues to be a laggard. In fact, the order visibility is extremely bleak, though they have won few orders in the today also, but those things were broadly there in the pipeline and in L1 stages. Remember, a company like BHEL would require a 30,000 odd crore plus kind of a number in order inflow to justify their current revenue run rate. So that is quite a difficult and uphill task for that particular company.
Okay, fair enough, Rohit. You know, we've spoken about a whole host of companies and stocks. I just want to understand from you, while of course we spoke about order inflow, what company, according to you, is best placed at this point of time to essentially, when it comes to execution capabilities, when it comes to attracting these order flows, what company and what would be your pecking order within the capital goods space?
So, as I said, we were extremely bullish about even names like Siemens and Cummins India, but let me be very clear about it that Siemens, it has been an underperforming stock. The reason is that the company is doing a lot of group level restructuring and other such issues that continues to stymie the seamless execution that the company has been talking about for a long. So we have switched our pecking order to preferences of domestic capital goods names in terms of Larsen & Toubro. Larsen & Toubro has got a very strong catalyst coming up, so that is they are planning to they are working on an InvIT structure. So if that comes up well, and let's assume that they buy up the loss-making IDPL assets off, there is a good amount of balance sheet repairing you can expect in from Larsen & Toubro. So Larsen & Toubro continues to be the top stock in the pecking order. The remaining names, especially in the large caps, especially you have the names like BHEL and Siemens and Cummins for that matter. There are idiosyncratic issues. One, in terms of in Siemens, you have reorganization that is happening at the global level, and that continues to spook investors at this stage. And if I have to talk about maybe a company like Cummins India, we have been talking about diesel gensets for some time now. There is a lot of orders that were supposed to come in, but the capacity utilization continues to be at 60-65% capacity utilization. So the traction of order inflow probably seems to be not meeting up to the expectations.
Rohit, have you looked at Greaves Cotton? The management has been on the channel a couple of times, but massively underperforming stock for last 3-4 years.
Oh, well, we do not have a coverage on Greaves Cotton. I would wish to comment on it, but again, this comes into that largely fair domain where there is a overlapping of product portfolio with Cummins and Kirloskar oil engines. But I would refrain from making any comment on this particular company.
Sure. Okay, so let's shift focus and talk about cement. That is also something which you look at. Suddenly today the news flow is very high. There is a kind of a bidding war happening for NCLT cement assets. At the same time, commentary coming in from the government side that cement prices have to be under check. What's your call there? What are the stocks you like there?
So in cements, we continue to prefer pan-India players like Ultratech. But let me be very clear about it that there is a lot of capacity, that is excess capacity in southern region. So that is probably a region. If you are playing a regional place, the odds are quite unlikely that you can outperform the broader markets. But if I have to pick and choose these NCLT type of actions, yes, that continues to be. In fact, we have seen Dalmia Bharat snapping up for Murli, and now they are again into fray for this particular action. But Ultratech took over anyway. So what we are looking at is that there is a lot of inorganic capacity expansion that is happening up in cement space. So the consolidation is playing out well. Whereas in government's narratives in terms of the price and other such things, that would be we have seen this rhetoric even in the past. But the matter is usually a long drawn process. Even if let's assume CCI imposes a penalty, the matter goes to court, and then the proving part of it takes a long drawn process. So I don't think that should be a sticking point for us to make a decision call on the cement space. But when I talk about this consolidation part, that seems to be a fair bit of area where a lot of investor interest is aroused over the last few quarters. And we are seeing, case in point, this particular asset in Binani. It's usually the company that will be acquired that would be investor interest rather than the company that will be acquiring it, because the greenfield, if you have to put up a cement capacity, your cost will be somewhere around $120 per ton. So there are some regional cement names which is probably trading at $80 to $90 per ton, and maybe but the kind of quote that I've got to know from Binani is they've been not on a very higher front. So somebody probably would who is sitting at Binani Industries would probably gain to benefit. But having said that, let me put a word of qualification here that I do not cover that particular company, and so this continues to be an area of action, and there is a fair amount of interest.
All right, fair enough, Rohit. Yes, Binani, of course, is a developing story since some time now. Thanks a lot for joining us, giving us your perspective, not only on capital goods, but also on cement, which has been quite in the news since some time now.